Welcome back, dear traders. Wall Street is opening a new trading week on a pessimistic note for the same reasons. Let's discuss the latest developments in the US stock market, high-impact events and trends. For a start, let me remind you that the major US stock indexes closed on Friday with the steepest intraday fall since June 2022. The Dow Jones tumbled 3.03% or 1,000 points on Friday. The Nasdaq plunged a whopping 3.94%, and the S&P 500 lost 3.33% to close at 4,057 points. The benchmark stock indexes are trading firmly in the red in the New York pre-market. Futures on the stock indexes are already down by 0.73 and 0.97% today. The S&P 500 is expected to trade in the corridor between 3,970 and 4,040 points. On a Friday, the Fed's chairman admitted that the central bank is facing a challenge in its efforts to push down soaring inflation. The stock market responded with an immediate decline. In essence, the Fed's leader said nothing new at the symposium in Jackson Hole. He just confirmed his commitment to further rate hikes, and his remarks were viewed as extremely hawkish. Citing his words, the US economy needs aggressive monetary tightening for a while, so investors lost hope that the central bank would make a pause in the cycle of rate hikes. Powell sent a message that the regulator would go ahead with the rate hikes and keep them at elevated levels until inflation is tamed. Besides, he warned that the high interest rates would put a strain on households and businesses. Thus, inflation would be stemmed, but at a cost. A failure to restore price stability would mean far greater pain, Jerome Powell added. Investors grasped the point that the market would be overwhelmed by higher volatility because stocks would trade under tough conditions. Now, traders estimate the chance of a third rate hike by 75 basis points in September at 68.5%. Besides, they project the federal funds rate at more than 3.7% by the year end. The major stock indexes responded to such prospects by a sharp fall. The S&P 500 has increased by 11.6% since mid-June. Nevertheless, the index is still following the overall bearish trend after a collapse in early January. Some investors fear rough September due to seasonal weakness and economic losses on the back of rate hikes. Today, there are no high-impact events to support Wall Street. Fed policymaker Lael Brainard will speak tonight. The highlight of the week will be the U.S. non-farm payrolls for August, which are due on Friday. Indeed, the lull in the labor market could ease pressure on the Federal Reserve. Stocks of companies with a mega capitalization such as Apple, Tesla, Microsoft, Amazon and Meta traded lower in the New York pre-market. Likewise, the stocks of banks and energy companies also traded in the red. Meanwhile, the US dollar index climbed above 109 points thanks to the hawkish rhetoric of the Fed's chair. The index dipped in the New York pre-market. Its intraday corridor is seen between 108.30 and 109.10. The key idea in a Powell speech was that the Fed would not hesitate to raise interest rates further despite recession risks. The US dollar owes its strength to high interest rates and fears of a global recession. And in this context, its index conquered the highest level in 20 years, in contrast to the Chinese yuan, and the pound sterling weakened the most since the pandemic outbreak. Influential central banks are on the same page with Jerome Powell. One of the ECB policymakers stated on Saturday that central banks are running a risk of losing public trust and should take drastic actions, even though it might entail a recession. And this week, investors will get to know inflation data on Germany and the European Union for August. The EU CPI is expected to surge to 9% annually. Amid the hawkish US Fed, the outlook for the US dollar is clearly bullish, despite a minor dip on Monday. Moreover, investors seek shelter in the greenback as a safe haven asset. The USD CAD pair has climbed above 1.3040 on the back of the firm greenback. The intraday corridor for the currency pair is defined between 1.2980 and 1.3040. The economic calendar reminds investors of some macroeconomic data from Canada. Investors will be able to assess Canada's economic output. Until then, the loonie will depend on its American counterpart in highly volatile commodity markets. The energy market is still vulnerable to the fears of a global recession. Nevertheless, oil prices are heading for new highs today. Investors are wavering between tight supply and the threat of a low energy demand. Last week, Saudi Arabia disclosed the probability of oil production cuts by OPEC countries and allies with the aim of stabilizing volatile markets. This move is supported by Congo and Libya. Violent clashes between rebels in the Libyan capital escalated worries about further disruptions in oil supplies. The key crude export terminal in Kazakhstan is suspended longer than expected. The nuclear talks between the United States and Iran are going to last until September. Meanwhile, futures on the Brent crude rose 1.98% to trade at 102.99. And WTI futures grew 1.16% to trade at $95.12 a barrel. Powell's hawkish comments brought the doom and gloom on the Wall Street and the crypto market. Bitcoin plunged below $20,000 for the first time in 6 weeks. The token has lost almost 17% for the month. Today, digital assets are trading lower in parallel to stocks of the high-tech giants and rapidly developing companies. Analysts do not dare to make an accurate forecast for cryptocurrencies. Traders are monitoring how the flagship crypto is trading at the level of 19,800. If this level meets the challenge, the price could climb above $20,000 and recoup some of the losses. Otherwise, Bitcoin is facing bearish prospects and the most popular crypto could test the lows of the year. The token might decline as low as $18,800, though it's too early to predict a fall to $17,700. All in all, our analysts are warning of the sour sentiment on Wall Street. Both bulls and bears are able to gain decent profits with the InstaForex. See you tomorrow.